Assalamu alaikum everyone. Welcome back to Ethical Finance Talks. Today we are diving into something really interesting and practical, and that is investing using Musharakah. Now, this is a very powerful concept in Islamic finance that can really change the way you think about investments. So let's jump right in. All right. So first and first, what exactly is Musharakah? Musharakah, which comes literally from the Arabic word Shariah, which means partnership. In Islamic finance, it's a joint venture where all partners share in the profits and losses. It's all about risk sharing, mutual cooperation, and ethical investing. Pretty cool, right? Now, let's talk about some practical ways you can invest using Musharakah. I'm going to be covering three main areas in this video. The first one is real estate, small businesses, and also mutual funds. So let's start with the first one, real estate. Investing in property through Musharakah can be a fantastic way to get into real estate market ethically. So how does it work? So basically, you and one or more partners come together to buy a property. Everyone chips in with capital and you share the profits from rent or the sale of the property based on what each person had contributed. For example, if you and a friend invest in a rental property, you would split the rental income according to your initial investment. It's super important to have a clear agreement from the onset, outline who is putting in what, how profits will be shared, and who is responsible for what. Now, this keeps everything transparent and fair. One of the biggest advantages of Musharakah in real estate is that it allows you to pool resources. This means you can invest in bigger and potentially more profitable properties than you could on your own. Plus, having multiple investors can help mitigate a lot of risk. If one property doesn't perform as well as expected, the impact is shared among all partners, reducing the financial burden on any single individual. Now, you might be wondering what types of properties are best for Musharakah investment. There's a lot of properties. Number one, we have residential properties like single family homes, apartments. These are popular choices because they tend to be more stable. You also have the commercial properties such as office spaces or retail units. Now, these can offer higher returns, but also come with higher risk as well. Then there's real estate development, which involves buying land and building properties to sell or rent. These can be very lucrative, but requires more expertise and capital. It is very crucial to consider the location of the property. Areas with strong economic growth, good infrastructure, and high demand for rental properties, these are all ideal options. You need to conduct thorough market research and consult with real estate experts to identify the best opportunities. Now, let's talk about small businesses. Musharakah is a great way to support entrepreneurship and earn a return on your investment. Here is how it works. You and your partners pool your resources to start or grow a business. You share the profits according to your agreement, and you also share any losses. This really encourages everyone to work towards the success of the business because everyone has a skin in the game. Now, investing in small businesses through Musharakah can be incredibly rewarding. Not only do you get the potential financial returns, but you also get the satisfaction of knowing you are helping entrepreneurs achieve their dreams. It is a fantastic way to give back to your community and promote local economic growth. Now, to give you a more concrete example, let's say you are interested in a local coffee shop that's looking to expand. So you and a few partners could come together to provide the necessary capital. You would share in the profits from the coffee shop sales, and you would also share in any losses if things don't go as planned. But by being actively involved and supportive, you can help increase the chances of the business's success. When investing in small businesses, it's important to carefully evaluate the business plan and the management team. Make sure you believe in the business's potential and the people running the business itself. Now, clear communication and trust among partners are key to a successful Musharakah partnership in whatever business. Also, consider diversifying your small business investment. Instead of putting in all your capital into one business, you could invest smaller amounts in multiple businesses. Now, this way, by doing this exactly, you would spread your risk and increase your chances of finding a highly successful venture. Now, lastly, let's talk about mutual funds. Yes, you can even use the Musharakah principle in mutual funds. In a Musharakah-based mutual fund, money from multiple investors is pulled together to invest in a diverse portfolio of stocks, real estate, and other assets. The fund managers make sure all investments comply with Sharia law. Profits are shared among investors based on their share in the fund. One of the best things about Musharakah mutual funds is the diversification part of it. You are not putting all your eggs in one basket, so to speak. This can help spread risk and potentially increase returns. Plus, since the fund is managed by professionals, you benefit from their expertise and knowledge. So when choosing a Musharakah mutual fund, look at the fund's track record, the expertise of the fund managers, and the types of investment the fund makes. So make sure the fund's goals align with your own investment objectives and goals. Additionally, consider the fees associated with the mutual fund, because management fees can really impact your overall returns. So it's important to understand what you will be paying and whether the potential returns justify this cost. It's also worth looking into the fund's ethical guidelines. Since Musharakah is based on Islamic principles, ensure that the mutual fund strictly adheres to these guidelines in all its investments. All right. Now, we have covered all these areas. Let's address some common concerns and tips for investing using Musharakah. One common concern is the potential for disputes among partners. So to minimize the risk, always have a detailed and legally binding agreement. Clearly define roles and responsibilities, profit sharing ratios, and conflict resolution mechanisms. So having everything in writing helps to avoid misunderstandings and ensures everyone is on the same page. Another tip is to regularly review your investment performance and the health of your partnership. Schedule periodic meetings with your partners to discuss how things are going. Address any issues. Make necessary adjustment if there is a need for it. Remember, communication is key to maintaining a successful Musharakah partnership. Also, educate yourself continuously, because Islamic finance principles can somewhat be complex, and it's important to stay informed about best practices and emerging trends. Attend workshops, read books, and follow reputable sources to enhance your understanding and make better investment decisions. Finally, don't be afraid to seek professional advice, consulting with financial advisors who specialize in Islamic finance. These can provide valuable insight and help you make more informed investment decisions. They can also assist in structuring your Musharakah agreement to ensure compliance with Sharia law and maximize your investment potential. So there you have it. Practical ways to invest using Musharakah. So whether you're into real estate, you want to support small businesses, or prefer the diversification of mutual funds, Musharakah is ready, and it can really offer a flexible and ethical way to grow your wealth. Thanks for watching, and if you find this video helpful, give it a thumbs up, share with your friends, and don't forget to subscribe to Ethical Finance Talks for more tips on ethical and Islamic finance. Leave your questions and comments below. I would love to hear from you. Until next time, happy investing.